Good morning, my name is Anthony Morris. I'm the CEO of Market Harmony and I'll be taking you through the presentation. The purpose of the presentation is to show you how we go about timing major market turns, to give you our current views on a few markets and to explain how we may be of service to you. Market Harmony uses a proprietary approach which allows us to identify major investment opportunities across global asset markets. Our approach is very visual and we feel it speaks for itself. So let's jump in. Market Harmony has been developing our proprietary system, the Harmonic Grid, since 1995. This grid consists of two sets of parallel lines and can be viewed as a series of upward and downward sloping channels. We call the upward sloping channel the bull channel and the downward sloping channel the bear channel. So here we've highlighted a bull channel that this market has evolved within. A break down and out of the bull channel to the right indicates an obvious weakness and loss of momentum. The market will then tend to trend sideways to lower until the next lower grid line is tested. This is the point that the market will attempt to reform a bullish move, a market's natural tendency. A break up and out of the bull channel to the left is an indication of emphatic strength and a move to bubble conditions. It's essentially the shift from optimism to euphoria, and these are the very early warning signals that eventually set up for big moves lower. So here we can see the bear channel that illustrates market action traveling in an extended downward sloping formation. This perspective allows the client to better understand bear market conditions. Okay, so let's now look at an example of the harmonic grid in action. The following is a look at the German stock market, the DAX, between 2003 and 2009. So here we are looking at a long-term chart for the DAX, dating back over 10 years. Each bar on the chart is the open high-low close for the month. So first we apply the harmonic grid to the chart of the market we're interested in, such that the significant turning points occur on the lines of our grid. We then note where all the other lines of the grid are in relation to the market's current position, to establish where the support and resistance levels are likely to be. In this chart, for example, we can see that the market is at a critical juncture. It's testing one of our upward sloping support lines. And as we said, these support lines have the potential to trigger bullish moves. In this situation, we advise clients to buy the market at or very near the grid support line, essentially betting that the support from this line will generate a new bullish advance. To manage the risk, should we be wrong, we suggest to clients a suitable stop at the other side of our support line. We also advise clients of a target level up at the overhead line of resistance should things go as we expect. As time passes, the stops and targets will move higher. Here is the same market again, this time 4 years later in June 2007. We can see that the market is now testing the resistance generated by the upper limits of the bull channel. This is the signal to take profits on long positions originally generated back in 2003, and if aggressive, to take on short positions. Notice that the bull channel extended for 4 years, during which time the system generated 4 further opportunities to add to our original long position. Here in March 2009, we again see the DAX at the critical upward sloping support line, having fallen precipitously from the 2007 highs, as we expected. Now we are interested in buying the market again, with a stop the other side of the line and a target up at the overhead line of resistance. Okay, now for a look at some of our current views, and we've taken one example from each of the 4 major asset classes. So this is the format that clients receive our work in. Further to the buy signal generated for the DAX back in March 2009, here we have the current view, and the news does not look good at the moment. We have therefore been warning clients for some time that continuing to be long of equity markets was going to become an increasingly risky idea, and that it was time to take profits on those 2009 positions. If aggressively minded, it's time to take up short positions, again with the stop the other side of the line of resistance, and a target down at the upward sloping support line. So here we can see the cotton market, and it's a beautiful example of what happens when a market breaks left and higher out of its original bull channel. We view this as the shift from optimism to euphoria. Once the market challenges the resistance in this bubble channel, it always collapses. The message here is loud and clear: don't be long cotton. Significant levels: the first support in the bubble channel is currently at around 165, but we expect a full retracement to the following support, which is currently down at 96. Here we have the 30-year note yield. It's an outstanding view of the bear channel in action. Yields look to be headed sideways to lower in the immediate future, locked in this multi-year bear market. 3.75% is the long-term support, while a 5% print would spell the end of the bear market formation. So here we're looking at the Aussie dollar, long-term chart again. Market looks very vulnerable to a significant retracement from these lofty levels. The long-term support comes in at 86 and the next one is at 68. So what are the advantages to our clients? Market Harmony delivers a significant edge through the exceptional timing of market opportunities. Concise and consistent advice using a visually powerful format, a clear representation of market action, complete control of the investment process, a comprehensive approach to risk control, and an extra layer of rigor to the investment process. Clients get access to our Global Markets newsletter, which is published on a weekly rotation. We cover global equities, commodities, currencies, and bonds. Here we provide analysis, identify entry levels for markets, and update stop and target levels for active recommendations. We also provide ad hoc analysis as market conditions warrant, and provide access to the client section of our website where current and past analysis is easily accessible. In addition, Market Harmony offers bespoke services which involves direct access to us by email, phone, face-to-face meetings, and we also do bespoke portfolio coverage. Please visit our website at www.marketharmony.com for more comprehensive information, or you can contact us at info@marketharmony.com. This is the visitors homepage where you can access more information about the methodology. There's more historical work there, some stuff about who we are and how to contact us, and hopefully many of your questions will have been answered in the Q&A section. Many thanks for your time today in reviewing our work. All the best.